And welcome to this midweek edition of Business Incorporated live on Channels Television. We'll be tracking the markets, the economy, and of course we see all that affects your pocket. Here are the stories that set your agenda. French President Emmanuel Macron arrives in Addis Ababa for official talks aimed at strengthening France-Ethiopia relations. Egyptian Space Agency signs cooperation deal with Citadel on satellite development. And Nigeria and Morocco move to finalize 2026 agreement on Atlantic gas pipeline. And great to have you join us for this half hour. I'm Will Ibang. Let's kick off with commodities market and see how they're faring. And we'll look at the oil space where we see oil prices that dip today in terms of uncertainty around the energy space, the Strait of Hormuz, and the talks between President Donald Trump, the U.S. President Donald Trump, and Chinese counterpart Xi Jinping. Let's see. Natural gas that fell today 0.18%, settled at $2.83, and we see Brent down about 0.5% there at $107.23 a barrel, and WTI also down 0.71% to $101.45 a barrel. Let's look at the metal space and see if they perform them better. They're in the green, you know, with that inverse relationship with oil and metals. We see that spot gold up today 0.48% at $4,709.40. Spot silver also up. Platinum also in the green. Palladium, copper is also in the green. Definitely silver. That yesterday we saw that getting up higher, strengthening further, and investors are really making a kill out of this. But let's see other stories making the rounds there. We see Nigeria and Morocco are strengthening. They're targeting a 2026 intergovernmental agreement to move forward the planned Africa Atlantic gas pipeline project. Now, the proposed pipeline, valued at around $25 billion, is designed to transport Nigerian gas across West Africa to Morocco with further access to European markets. And the project is expected to span about 6,900 kilometers and cross 13 countries along the Atlantic coast. Officials say the agreement would formalize the legal and regulatory framework needed to accelerate development of one of Africa's largest energy infrastructure projects. And we'll move on. We see Egyptian Energy, that's the space agency, assigned a cooperation, a protocol with Italian aerospace company Citadel to strengthen collaboration in satellite technology and space innovation. And now the agreement is aimed at enhancing international partnerships, supporting knowledge exchange, and developing capabilities in satellite systems and remote sensing. It also outlines plans for future joint projects in space applications in line with Egypt's broader strategy to expand its presence in the global space sector. And the agreement is expected to boost technical expertise and support innovation in space technology development. Up next, we see President Emmanuel Macron has arrived in Addis Ababa on an official visit, and that is aimed at strengthening diplomatic, economic, and cultural ties between France and Ethiopia. He was received at Bole International Airport by Prime Minister Abiy Ahmed, who welcomed the French president really warmly and highlighted the growing partnership between both countries. Now, this marks Macron's third visit to Ethiopia, and that underscores continued high-level engagement on issues including investment, development cooperation, and regional stability in the Horn of Africa. The visit is expected to feature talks on expanding bilateral trade and deepening strategic cooperation between Paris and Addis Ababa. From there, let's check in on equities markets, shall we, and see how they're faring in Africa. We see the NGX still riding that bullish trend there. We see it up at intraday 0.23%, and this is on the back of lots of volumes and values we're seeing in the banking sector. It's up now 0.23% at 252,990 points. We see South Africa also in the green, slightly flattish, 0.06% at 116,838 points. And let's look at EGX 30 in Egypt. They were, however, in the red, down 1.4%, and that's about 53,291 points for that index. We see Kenya closing Tuesday session in the green. That's 0.56% up. And let's move on to what's driving bullish sentiments at the NGX, and we're joined by Onose Asotie Enawolo, Senior Investment Analyst, Main Street Capital Limited. Onose, it's good to have you join us. Honestly, if you could unmute, but just very quickly, what stocks are driving intraday numbers as we speak? I know I mentioned the banking stocks, but are there other stocks that are pushing investors to put their money on the exchange?
Yeah, definitely. So you do have the banking stocks, but you also have stocks that are seeing a lot of volume and value, like the NGX group. You also have Aradel, which is a favorite amongst investors this year. You'll have MTN as well, that are right now really pushing a lot of the value and the volume on the market.
So the NGX, we've seen that performance fantastically well for some time, for a lot of sessions now. But is this just being boosted by good earnings that we've been seeing from listed equities?
We're seeing a lot of factors that are boosting the equities right now. Yes, on one end, it is good earnings. We people have discovered, or we have seen in recent times, over the last several months, a lot of companies have proved their resilience, especially in the FMCG space, and even some tier one banks. But one thing that you also need to keep in mind is that there are a lot of structural factors that are in play right now that are really creating tailwinds for the markets. Number one is the pension, increasing the limits for PFAs. Another is a lot of foreign portfolio investors coming in to try to front run our FTSE reclassification. So there are a lot of tailwinds. Yes, on one hand, you do have positive earnings, but there are also a lot of structural tailwinds, that are expected to reprice a lot of stocks.
So speaking of earnings there, let's just jump on that. Fidelity Bank released that positive performance for the full year 2025. That's their audited results. The gross earnings, we saw that up 45%, 45.65%, 45.6% year on year. From 1.04 trillion they recorded in 2024. Shareholders fund crossed 1 trillion naira mark, but profit after tax came under pressure, declining by over 12%. Speak to us about the drivers here.
Yeah. So for Fidelity, one thing that is affecting not just Fidelity but other banks like Fidelity is, you have gains from derivatives. In specifically in Fidelity's case, you had a situation where they logged, like, I think was it 200 million in derivative trading losses, for the year, and that really pushed down their push down their profit after tax. And so for some banks, it could be significantly less foreign exchange evaluation gains that are hampering on their profit after tax. But I know that in Fidelity's case, it was one of the major factors was largely the derivative losses that they suffered during the year.
Okay, looking at their interest income, it looks like they made a lot more money from lending money to people. How much of that do you think contributed to their income vis-a-vis maybe other sources that they're probably looking at, say maybe because we also see that net loans and advances that declined 2.4%. I'm just wondering if they made a lot of money from interest income, how do we now marry the fact that their borrowing also declined?
So that's so one thing I did notice with a lot of banks is, depending on the type of bank and what they do. Some banks had situations where a lot of their interest income was from core lending, and banks like FCMB fall within that category. There are some banks like UBA that they are lending. Yeah, you had core lending, but it was largely to corporates. I think UBA and GTCO as well. And then you had some banks where a good chunk of their interest income was from government securities, right? So I know there was a particular bank, I'm not sure if it's Zenith, where their interest, about 68% of their interest income was from government securities, treasury bills, bonds, and even the standing deposit facility, right? And when you have situations like this, yes, core lending, you have a situation where core lending might reduce in some cases. Some banks are trying to be a bit more prudent, especially post recapitalization. They're trying to pay a little bit more attention to who they lend to, so that they don't have situations where, like the forbearance and really high single obligor limits and those kind of situations. So you do have so for a bank like Fidelity, where interest income was higher, but core lending is lower, then you now kind of have to look to say, okay, is it, from treasury bills and bonds? And if it is from treasury bill and bonds, then okay, over the next 1 year, can we expect to see a similar performance, from the treasury bill and bonds and the fixed income that they hold, over the 1 year? And so I think these are some of the numbers and some of the things that investors are really looking at, when looking at Fidelity specifically.
Definitely, banks appears to have become bigger in size. We're seeing that total assets rising above 10 trillion naira there. This is talking about, is it just saying that the bank is controlling more loans, investments, cash? What's this about? What's the mix here?
Uh, so for when now, of course, we expect that there will be a significant rise in assets, for a lot of banks, right? And for Fidelity, yes, you had an increase in loans, right? I think almost like 1 trillion, right? More new deposits from clients, which gives them a lot more firepower, really, for loans. So yes, you did see, well, not more loans, but we did see more investments in debt instruments. So a lot of that cash that was coming in from deposit from customers were being pushed into debt instruments, right? And so yes, the assets in total, the assets will increase because as the liabilities are coming and they're putting it into debt instruments, that now makes them assets. So like I said, you will see a lot an increase in assets, right? And then it now depends on the asset mix. But I think one thing that you could really pay attention to is asset quality or asset utilization quality. As long as the asset utilization quality continues to be, sustainable and acceptable, I think we are not so worried about where they get, their interest income from. As long as they can, ensure that the way they are operating, they maintain, a specific asset utilization ratio.
Definitely, we don't really care as long as you're profitable. But looking at the shareholders' funding, that crossed 1 trillion naira, very big one for Fidelity Bank. But no dividend has been announced in this result. Are they erring on the side of caution here? What's happening?
Um, so we haven't gotten any form of announcement or communication as to why there isn't any dividend. But just looking at their equities, at the equity side of their balance sheet, you see that yes, total equity crossed 1 trillion, but a lot of that were in other reserves, some of which they are not really allowed to touch. For example, the non-distributable regulatory reserve, the amount of funds in that reserve, it rose to like almost 300 million from I think 150 million the previous year. While you also saw an increase in statutory reserves. So when you are looking at where they would actually pay dividend from, which ideally would be your retained earnings, the rise wasn't. There wasn't even a rise. Reserves, retained earnings was like 185 billion last year, I believe. And then so in 2024 rather, and then in 2025 it's about 173. And so that may now paint a picture, give you an idea as to why they did not, actually end up, or why they may not actually end up paying, dividends. Because you have a situation where your reserve earnings and the part of their equity that they can actually do something with has declined year on year. So if I were the management of Fidelity, I'm thinking, okay, well, we're not exactly known as being a dividend stock. Yeah, we've paid dividends over the last 4 years consistently, don't get me wrong, but we're not like a Zenith or a GT that people are primarily looking for dividends. Like Fidelity could still not pay dividends and the backlash wouldn't be as severe as a UBA. So if that's the case and our retained earnings are have dwindled year on year in a year where our interest income rose, then I might want to just pause on the dividends. But then again, like I said, we haven't got any official communication from the team or from the bank to say, okay, we are definitely not paying, and this is why we're not paying. So tomorrow they could announce that they are paying, and tomorrow they could announce that okay, look, we're not paying, and this is why. So it's still I guess in the balance right now.
Okay, is that why we're seeing the share price currently trading above just 121 naira, not as much as we hoped for, especially when a result like this comes out?
Well, yes and no, because on one end, if they had announced dividend, then I'm sure that, especially if they announced something that was higher than what they paid last year, I'm sure we would have seen the share price really fly. But to be honest, with or without dividend, Fidelity is a I would classify Fidelity as a growth stock when it comes to banking. As a stock that has a lot of growth potential. So we did see on Monday, yeah, I think on Monday or yesterday, we did see price kind of wobble a little bit, especially I think it was yesterday, the market where the result came out, but there was no talk of dividend, right? So price pushed down. I think it started the day at around maybe like 20, above 20 naira, 21 naira, and it pushed down to around 20 or the very high 19s. But you see that price has already recovered, and it's trading around 21, maybe not, maybe even 22 right now, and price has already recovered. So what I'm picking up is, unless there is going to be dividends, and maybe some people are already kind of betting on that, which may not really be the case. Personally, I think that what we're more seeing is, okay, market is digesting the fact that, okay, there may not be dividends. Plus, if you remember, 2 weeks ago there was the whole contagion with UBA thing, and Fidelity was hit, right? And so I think that a lot of the pricing of there's a possibility of no dividend, that kind of showed when price fell about 2 weeks ago from like 22, 23 down to around 18. So that already happened. So now if that already happened and market had already reacted to it, the possibility now is something that had been considered a while ago, when you're looking at price. So it's still not happening. It's like, okay, we're used to it, we know, but price is still recovering. So it shows, okay, people are still willing to buy, even if they may not announce dividends, for 2025.
Definitely, we do know that many tier two banks like Fidelity, Wema Bank, FCMB, they posted strong earnings in 2025, and definitely we'll say that they're kind of giving the tier one banks a run for their money. Thank you so much, Nasir Asote Enaola, Senior Investment Analyst, Main Street Capital, for sharing your perspective on Business Incorporated.
Thanks for having me.
Now let's look at other stocks in the Middle East now. Gulf stocks, the HI and Heli traders Wednesday as uh, investors watch the fragile Middle East ceasefire and the upcoming I-6 meeting between China and the U.S. Looking at the Dubai index there, we see 0.78% up. Abu Dhabi is also up 0.04%. And let's look at other markets within the region. Saudi Arabia, Dow was also up 0.17%. Very bullish sentiments permeating there. Qatar index is also up 0.42%, all at intraday. Now, so let's flip now to U.S. markets and see if they're trading as much as the Middle East are trading. Well, I can see they're mixed trading sentiments there ahead of this the fresh inflation data that we got. Tech stocks, they're driving momentum on Wall Street. And the Nasdaq 100 futures, we see that climbing 0.76%. S&P 500 also 0.22% up. But Dow Jones, that dropped 0.27%. Looking at President Donald Trump's visit with China, they're hoping for an easing of trade tensions between the two countries, and possibly we'll see more market reactions from there. Let's look at Asia markets now and see how they perform. The optimism of that conversation is drove stocks for Asia markets, and we saw that positive close. Nikkei in Japan is up 0.84%. Kospi in South Korea, more than 2%, up 2.63%, and the Hang Seng Index is up 0.15%. Let's look at other markets. In Greater China, we saw the Shanghai Index was up 0.67%, and the Nifty 50 in India was also up 0.11%. Now let's turn to the EU now for markets analysis. We're going to be joined by Lars Alter. He's going to be giving us the drill down there and tell us how markets are reacting, especially to Donald Trump's visit to China. Lars, good afternoon. It's good to have you join us.
Hi, Will. How you doing? It's good to be with you. Well, I can tell you it's a mixed bag for European markets right now, with the indices in France and in Spain trading a bit lower, but London up and Frankfurt up in the green as well. Frankfurt actually being the winner here in today's contest, but that is mostly due to strength in Merck. The pharmaceutical giant gains 8% after some strong numbers, and other companies are faring quite a bit weaker. Hapag-Lloyd among them. It's one of the world's largest ship shipping companies, and they're feeling the negative impact of the war in Iran on their books, specifically, of course, the closing of the Strait of Hormuz. I can't really say that the meeting here between U.S. President Trump and Xi Jinping in China is much of a topic yet, because, of course, we're waiting to see what will be discussed, what will possibly be signed. Expectations, I can tell you, are not very high. But if we do get any market-moving news, that would be more likely by the end of the day or tomorrow. However, tomorrow being a holiday, we would see a lot more reaction on markets probably towards the end of the week then.
Definitely, we'll keep an eye on that. Well, you mentioned the shipping companies, the stocks there. Merck was one of the companies you mentioned. Germany is known to be one of the strongest exporting nations in the world, but it seems to be sinking. Many in the industry are concerned, and they're trying to figure out a future for the exports-based economy. Lars, how is Germany's export going these days?
Yeah, well, at first sight, German exports actually don't even look that bad. The latest report by the government shows exports worth 135.8 billion euros for the most recent month, and that's up 0.5% over the month before, and it's even up 1.9% year over year. But the devil is in the details. While exports to other EU countries rose by 3.4%, exports to non-EU countries fell by 3.3%. And what's behind this? Mostly, of course, the developments in the major markets. China has long been an extremely lucrative export market, especially for the German auto industry. But those days are over, as China has established its own car market, and Made in China is a label that has become very attractive there. The situation might be a bit less dramatic for other parts of the industry, machine building and such, but they're seeing declines there too. Altogether, economists actually expect exports to China to drop by 1.7% annually for the years to come, and they're expecting exports to the United States to drop by 1.5% per year. That is, of course, the other big market for German exporters, or at least it was. That's partially due to U.S. President Trump's tariffs, as well as the generally difficult transatlantic relationship these days.
So what can Germany do to counter these trends and possibly grow its exports again?
Well, it's all about finding new markets then, and it's not like they're not out there. The EU is still working, albeit very slowly, on implementing the free trade agreement with the Mercosur countries in South America. There's a recent trade deal with India and Indonesia as well. Economists are actually expecting German exports to Asia without China to grow by 3.1% each year, with 3.9% growth with India and over 5% growth coming from Indonesia. And then, of course, there's the other European countries. Poland or the Netherlands have been growing strongly in recent years, Britain as well. So there are definitely opportunities out there. And that's why most experts are actually still confident in Germany's exporting business. They're saying the quality produced here is still top-notch, with many small and medium-sized machine builders actually being global market leaders. They have always been Germany's trump card, and they seem to be still going strong. They are building up new markets where the old big export markets are now failing.
Thanks, Lars. Always good to talk to you. Lars Alter, Deutsche Welle correspondent right there in Berlin.
Thank you, Will.
Now let's turn to crypto now and see how they're performing against the risky assets, especially now that we see gold prices, metal prices are jumping and oil prices are dipping. Well, Bitcoin is reacting negatively to that. We see Bitcoin down 0.84%. 80,000 though, $80,000, 245, and not bad for that coin. And we see Ethereum also down, XRP also down, Solana down, BNB, however, and TRX, they're in the green. Other coins, other altcoins, Doge is in the green, other altcoins are in the red. I will hope that we'll see more bullish sentiments and more positives for investors. So let's look at what news making headlines in that space as well. The U.S. Senate Banking Committee has unveiled the text of a landmark bill, the Clarity Act, that's designed to establish a comprehensive regulatory framework for cryptocurrencies. Now, slated for a committee vote this Thursday, the proposed legislation aims to clarify financial regulators' jurisdiction over burgeoning digital asset sector, potentially boosting its broader adoption. Up next, XRP, the lender has reached a major milestone with accumulation among large holders continuing to strengthen despite ongoing market volatility. Now, specifically, the number of wallets holding at least 10,000 XRP has climbed to an all-time high of 332,230 to be precise. Now, that's extending a steady growth trend that has been building since June 2024, and that's according to on-chain data that was shared by Sentiment on May the 13th. Now, looking at the next, we see Eric Trump, the son of President Donald Trump and founder of Bitcoin mining and treasury management company American Bitcoin, has announced new plans that will help his company and the U.S. dominate the global cryptocurrency markets. Speaking in an interview with David Lynn, published on May the 12th, Trump said there are effectively two races in the industry. The first one is centered on accumulating the largest Bitcoin treasury, and the other one acquiring the asset at the lowest possible cost. Good luck to them. And that is a wrap on Business Incorporated. For today, I'm Will Ibong, and I'll see you same time tomorrow.